Okay guys, so in this video we're going to talk about Beyond Meat. So this stock was really interesting to me. I was looking at this stock. I was expecting earnings to obviously give this stock a nice pop, but the stock absolutely collapsed. So it was trading around $150 on Monday, and then due to a couple, the earnings release and some kind of confusion on the McDonald's news with the McPlant, the stock went all the way down to $120. So what's interesting is that just about a month ago this stock was almost $193 and it looked like it was going to break through to 200 and go, and the stock absolutely crashed. So perhaps a lot of you guys out there ended up purchasing these shares, and now you're basically down almost 20% on your investment. And we're in kind of basically free fall for a lot of these stocks that were kind of buoyed by the whole pandemic situation and with the whole vaccine news and stuff. So I just wanted to talk a little bit about Beyond Meat and kind of give my opinion on what you should do if you're still holding the stock, if you're still down big, and what I think is going to happen in the future. Before I get into that, guys, please give this video a thumbs up. It really helps. Okay, so the biggest news was that McDonald's unveils the McPlant line, which includes meatless patties co-created by Beyond Meat. So I think there was a little bit of confusion. Beyond Meat is working with McDonald's to create the McPlant line. Of course, McDonald's kind of lied a bit when they initially announced the release. They kind of downplayed their involvement with Beyond Meat, but yeah, McDonald's is working in conjunction with Beyond Meat. So this is a great long-term bullish signal. One of the problems I've had with McDonald's is that they're extremely slow to kind of adjust their menu options for vegans and vegetarians and things like that. So this is a good sign, of course. And as you can see here, this is kind of one of their plant-based burgers. Basically, the whole goal is obviously just like Beyond Meat. The whole goal is just to offer more menu options to drive in more customers to test kind of a meat-free burger. So this is obviously a bullish signal in terms of Beyond Meat, because as you can see here, it says, but a spokesperson for Beyond Meat said in a statement to CNBC that the company co-created the plant-based patty that would be available as part of the McPlant line. So McDonald's is not creating their own burger. They're working with Beyond Meat. So this is great. We all know McDonald's is the largest restaurant in the world, and the fact that Beyond Meat will see an explosion in sales because of this deal. So this is a really, really, really good sign. But obviously, as you can see, that wasn't enough to keep the stock up, and Beyond Meat had a terrible quarter, which is one of the reasons why the stock was sold off so much. So if we take a look at the quarter release, you guys can find this information on investors.beyondmeat.com. Take a look at some of the numbers, and these numbers were, a big letdown, I would say. So even though net revenues were up 39% year over year, food sales due to the pandemic were down 41% on the kind of the food service revenues. And that's really basically because, a lot of the revenue that Beyond Meat is going to earn is through people, going to restaurants and things like that. And with so many restaurants closed and so many people kind of cooking at home and things like that, making their own food, which is something that I've been doing. I can't remember. I haven't eaten at a restaurant for months now. I've just been going to the grocery store and buying my own food. And I think, obviously Beyond Meat needs people to go to restaurants. So they're going to make their money. Obviously, people are going to buy some of their products for their own home, but a good majority of the revenue they generate is through restaurant sales. So as you can see, they took in around net losses of around $19 million. And obviously, people were expecting a lot more revenue, and that didn't happen. So that's one of the reasons the stock sold off. So as you can see, this is a statement from Ethan Brown, the CEO, and he's also the founder of the company. So it's definitely a good sign that this is a founder-led company. So he said, our financial results reflect the quarter for the first time since the pandemic began. We experienced a full brunt and unpredictability of COVID on our net revenues and accordingly through our profit loss. Unlike the second quarter, where record retail buying and freezer loading by consumers offset the deterioration of our food service business as stay-at-home and related measures set in, the long tail of retail stockpiling by customers, coupled with continued challenges across the majority of our food service customers, led to Q3 results that are lower than expected. So, basically what he's talking about is, obviously these are all short-term problems. Once we see, the vaccine released, and once you see more and more people going out. I think people will go out to eat. Obviously, I don't think, going to the grocery store will be as big as in the past, because I think grocery delivery is huge. But I think people are still interested in eating out. And of course, a lot of restaurants are going to come back into business. And, a year or two from now, probably won't be as big of a deal. But it's just important to realize that these are all kind of short-term issues for Beyond. The McDonald's deal is great news. I believe they also signed a deal with, I think it's Pizza Hut. So they're going to make a plant-based pizza. So, the deals are in place. It's just really now just about being patient. So as you can see, one of the most interesting things about this is kind of hidden in this quarterly release, what it says. Over the course of the quarter, we further invested in personnel and plants in the EU and China. Work towards the completion or acquisition of our new plant in Pennsylvania to support integrated product production. And so really they're expanding into Asia and Europe, which is excellent. And obviously that's going to translate in stronger sales. So I think one of the problems with Beyond is I think the institutional investors and things like that, I think people are just a little bit impatient. The restaurant business has been absolutely crushed by the pandemic, and Beyond is definitely one of those companies that is affected by the change in people's eating habits. So as you can take a look right here, their service numbers, retail was up in the U.S. This quarter year over year, but as you can see, food service numbers were down quite a bit, and food service numbers got absolutely crushed on international. So those food service numbers, need to grow. Obviously, Beyond, they can't generate all of the money through retail, selling their plant-based meats through the grocery store. That food service is quite a substantial part of the business. As you can see, that's basically what kept their revenue flat. But the good news is that obviously right now the bulk of the money is being generated in the United States. So there's a lot of room to grow overseas. And we're starting to see this more and more. Even companies like Netflix are planning the majority of their company growth is going to be overseas. And I expect the same thing for Beyond Meat. Right now the U.S. market is the biggest, but in the future I expect these international numbers to usurp these U.S. numbers, like we've seen with many other companies. You've got Europe, you've got China, you've got a lot of other countries out there, and even India. India, I think, has more vegetarians per capita than anywhere else in the world. So, expansion overseas is going to help this company in the long term. So, I think things look really, really good for Beyond Meat in the future. But right now, I think this is just a short-term blip. So, I wouldn't really focus too much. I recommend you kind of take a look at these quarterly reports. It'll really help you kind of, take in what's going on instead of just reacting to the price, because, the decline in these food service numbers, these are all short term. They should bounce back quite nicely next year. Okay, so now let's get into where I think the stock is going. Right now, the market cap of this company is around just under $10 billion. And, this company has a lot of growth ahead. I believe plant-based products are going to be around for quite some time. People are kind of, hesitant at first, but I've tried the Beyond Meat burger, and, I have gone to several restaurants and they said it's their most popular product. Personally, it's probably not the best tasting burger out there, in my opinion. But the fact that McDonald's is working with them in conjunction, McDonald's is definitely going to make a good tasting burger. And I think that McDonald's deal and other deals, with fast food restaurants, I think they can really, really help this company grow. And, they're partnering with one of the biggest restaurants in the world. So obviously McDonald's isn't going to choose their product if it's junk. So I think that even though the product may not taste as great now, obviously they can improve it on the future. And I think that this is definitely a $200 stock, assuming that things come back to normal within reason, within maybe the next 3 to 6 months. And like I said, if you're down right now, I would say, if you're long term, if you're in the next 5 years or 10 years, definitely hold on to your shares. But if you're looking for some short term gains, there are probably some better stocks that you can get into. I would say you would try to get into some REITs. I think REITs are a really, really nice place to get into right now. And also some other dividend stocks, because one thing about Beyond Meat, it does not pay a dividend. So you're definitely looking for price appreciation here. This does have the potential to become a $50 billion company, $100 billion company in the future. You know, if plant-based meats really catches on, and as we're seeing with the whole electric revolution, plant-based meat is definitely more environmentally friendly than traditional meat products. So this looks like a good buy. So what I would say right now is definitely proceed with some caution. There could be some more weakness in the stock in the short term, but if you're looking to hold for at least 2023 or so, I would definitely be adding to my stake. So I hope that gave you guys some advice here. I say, you know, if you can hold on, definitely hold on, buy more on this dip, because once those food service numbers rebound and those international sales kick up, you're going to see a big growth in their revenue. So that's it for now, guys. Hope you enjoyed this video. If you enjoyed my content, please smash the red subscribe button for more videos on Beyond Meat and other high growth stocks that can make you money. So that's it, until next time, guys. Take care.